Let's take a look at Dogecoin. Alright, this is the daily chart for Dogecoin, and the data I have is to about 7:50 a.m. Pacific Standard Time on December the 16th. 2 days ago, we saw Doge spike up. The days prior to this increase in price, Doge closed at about 15.7. Then Elon tweeted, Tesla will make some merchandise buyable with Doge and see how it goes. His tweet caused the price to spike up from a closing price of 15.7 cents all the way to a high of 22 cents, or over 40% gain. But after that, the price slowly retraced, and Doge closed the day at 19.1 cents, or up about 20%. So basically, from the time it spiked up all the way to 22 cents until it closed, Doge gave up half of the gain. And then we see the following couple days, the price continued to retrace. It seems like there is really no momentum at all. And now we're looking at Doge trading at 17.9 cents, or down about 1%. So if we look at the gain resulting from Elon's tweet, the gain is down to about 14%. Doge is definitely having a hard time retaining the gain. The reason being is there is no momentum. As you can see, after this big spike up in buy volume, the following 2 days, there's no buy volume at all. The good news did not create any sort of excitement, which could have resulted in some sort of sustainable buying momentum that we were looking for. Instead, what we're looking at is after a major spike up in price, the price immediately retraced. It seems like either professional traders took advantage of Elon's tweet, bought in before the spike up and then cash out, or retail investors who have waited so long for the price to rebound get nervous when the price has been in this retracement mode for so long, and then the minute they saw the price spike up and then immediately see the price retrace, that might cause some of them to close their positions just to get it over with. And that could potentially cause this cascading in selling pressure, causing the price to continue to retrace. Here's the key. If we look at yesterday, the price retraced and dropped below this red line, which is the 10 days moving average, but found support, bounced up, and then closed the day above the 10 days moving average. If the trend continues today, meaning that there's a possibility that the price could continue to retrace, if it does drop down and retest the 10 days moving average, we definitely want to see some sort of buying support at this level, because a close below the 10 days moving average could definitely spell trouble. Let's take a look at Doge on this 1 hour chart. After Doge ran up to about 35 cents, which is around the end of October, after that, the price continued to retrace, following this downward channel. As you can see, the price oscillated within this downward channel. And finally, 3 days ago, after Elon's tweet, we saw the price spike up on strong volume. Doge finally was able to cross over the resistance of this downward channel, and now it is trading outside of this downward channel. What I want to do is I want to zoom in so that we can very much isolate and look at the past few days. As you can see, after Elon tweeted, the price spiked up. But what I see here is for only 2 hours, that's when the buying momentum continue. But after the first 2 hours, it seemed like the momentum is pretty much gone. And after that, we saw the price continue to drift lower, lower, and lower, to the point where it dropped all the way down to about 17 cents, where it also retested the 10 days moving average. Fortunately, it was able to find buying support and bounce up. And by bouncing off this, it's prevented the price from re-entering this downward channel. But the key is, if the price continues to retrace, we need those to be able to bounce off the 10 days again. Because a breakdown at the 10 days, then those would likely re-enter this downward channel. And the minute it enter the downward channel and trading below the 10 days moving average, then there is a very high probability that seller can continue to drive the price down. And if that is the case, if 15 cents does not provide support, then we're looking at the price retest this prior low at around the 12 cents. And if there is no support at the 12 cents, then we're looking at the potential for those run down even to as low as 10 cents, where it would be retesting the support of this downward channel. This is definitely something that we do not want to see. The preferred scenario would be if we look at this when the price dropped down to about 12 cents and bounce up, then retrace to this point, which is right at around 15 cents and bow. So we have this high low. And then by just connecting these 2 points and then extend that to cover this point, that gives us a new upward channel. And then just extend that up. So if we look at this, the key is this. If those bounce off the 10 days moving average and trend up, then there's a chance for the uptrend to continue. However, if a breakdown below the 17 cents, then we are looking at possible support level at 16.5 cents. A breakdown, then 15 cents, and then 12.5 cents. If those can bounce off the 17 cents, stabilize and trend over that, then the major resistance would be right at around the 18 cents. Cross over the 18 cents, then it can potentially run up and retest this prior high at 22 cents. Go back to the daily chart. The first positive sign is for the past 3 days, Doge is trading over this red line, which is the 10 days moving average. The last time that Doge was able to close over the 10 day was right around the 1st of November. And then after that, the price dropped below the 10 days. And the minute it dropped below the 10 days, as you can see, the price continued to trend lower. By able to cross over the 10 days moving average, it is very much giving us a possible signal that this could potentially be the beginning for this reversal in price. But in order for that to happen, the price has to be able to close over the 10 day, which is around the 17 cents. So the 17 cent is the key price that we need to monitor. One of the biggest problem I see with Doge right now is its inability to stage any sort of buying momentum. All we see is one quick spike, and after that, the price retraces. So far, we haven't seen the kind of sustained buying support like how we've seen that around the April and May timeframe. It could be that so many of the retail investors, after waited for so long, and especially watching, hearing all this video promising that those would be up to $1, and they are not seeing that. So they are getting tired. The minute they see the price spike up, they just dump their holding and get it over with. So I do think that those definitely need the wells to stay this sort of sustainable buying support to create the excitement about Dogecoin again, to attract new retail investors. And I'm still betting on something like that will happen before the launch of the SpaceX Doge 1. That's it for this video, and don't forget to click that like button and reward me with a like if you appreciate the content that I'm presenting. Also, if you are new to my channel, don't forget to click that subscribe button and subscribe, and make sure you turn notification on. And if you have Twitter, make sure you follow me at Vietmaxim, because I provide constant update on all of our favorite cryptos.